Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Wednesday, April 29th, 2009. We begin in the US, where GDP fell more than expected in the first quarter. Growth was down an annualized 6.1%, barely changing from the 6.3% decline seen in the fourth quarter. Businesses cut spending and slashed inventories, while investment in housing was also a major drag on growth. Consumer spending, however, increased 2.2%, a return to positive territory following 2 quarters of negative readings. Inflation measures also saw an uptick, beating forecasts, which could indicate that the programs enacted by the Fed and the government are having an effect on deterring deflation. An aggressive drawdown of inventories was a big part of the decline in the first quarter, but that is necessary in order to flush out stockpiles and end the freefall in industrial production. If inventories are run down, companies will place new orders for goods, which could help the GDP results in the third quarter. The second big piece of news today was the FOMC announcement, which held mainly to expectations. Policymakers held rates steady and said that the economy had improved since the last meeting and that they would continue the program set out in the previous meeting, though they did not add any new quantitative easing plans. The statement helped Wall Street push up to intraday highs, though they gave up some of their loftier gains prior to the close. In currency markets, the euro-dollar pair extended its rally from yesterday, climbing to the 1.3270 area in Asian and European trading before stalling in the New York morning session. The euro was stronger on an improvement in economic sentiment and stronger European stocks, which increased risk appetite. The weaker than expected US GDP release did not have a big impact on risk sentiment, as US stocks increased in the morning, which gave another leg to the euro rally, pushing the pair to the 1.3340 level prior to the FOMC statement. Following the FOMC announcement, the euro paired some of its earlier gains, though the move was more a retracement than a start of any new greenback strength. In Europe, the European Commission's economic sentiment indicator picked up for the first time since May of 2007. The confidence index rose to 67.2 as consumer and industrial confidence both rose by 3 points. The business climate indicator also improved more than expected, climbing to negative 3.33. However, in a release that may worry ECB officials, money supply rose a smaller than expected 5.1% on the year in March, with private loans showing a smaller than expected 3.2% on the year. Both were weaker than in February and may increase the pressure on the ECB to lower rates. The central bank meets next week. The pound-dollar pair broke out of its 2-day range and rose to 1.48, the highest level since last Monday. The pair stalled there and retraced part of its advance following the US GDP data, as the weaker-than-expected release increased risk aversion in the half hour after its release. However, after testing the 1.47 area, which was acting as resistance earlier in the week, but now switched to support, the pair started climbing again to set a new intraday high. Following the FOMC announcement, the pair retraced to the 1.4750 level. Commodity currencies had a strong day today, fueled by the rise in risk appetite amid higher global equities. The Aussie-US dollar pair rallied 200 pips from its open near 0.7050, test the area around 0.7275. The pair stalled during the US GDP release, but then went on to break Friday's high before running up against the line of resistance and pairing some of its gains in late New York trading. The US dollar-Canadian dollar pair also saw a 200 pip swing today, moving from 1.22 to below 1.20. That broke below an upward sloping short-term level of support and came to a stop close to horizontal support at 1.1980. The yen was weaker today amidst risk appetite. The euro-yen pair, which we have seen dive down to start the week, rose to the 129.40 level in today's trading. That's a 300 pip move in today's session and more than a 500 pip move from yesterday's low to today's high. The euro reclaimed all of its losses from earlier in the week against the yen, as did other currencies such as the Aussie and Kiwi, which had similar price action. After touching the 130 level though, the euro-yen pair retreated slightly. The dollar-yen pair, our final pair for today, broke above a downward sloping line of resistance in the wake of the FOMC decision, reaching right below the 98 level. From there, it declined somewhat, but it's the first time this resistance has been broken since being established on April 15th. At 5 p.m. Eastern today, though it was too late for this broadcast, the New Zealand Central Bank will decide on interest rates with expectations of a 50 basis point cut. Also tonight, the UK will post data on consumer confidence, Japan releases its manufacturing PMI and industrial production data, and Australia will reveal its leading index, private sector credit, and a quarterly business outlook survey. Overnight, the Bank of Japan will conclude its interest rate meeting and will also release housing starts. Germany will post retail sales data and its unemployment change, while the Eurozone reveals its flash CPI and its unemployment rate. The UK, meanwhile, releases data on housing prices. To wrap up a busy day of fundamentals, the US tomorrow will release data on jobless claims, personal income and spending, consumer prices, and the Chicago PMI. And that wraps up our broadcast. Thank you for joining us here at CMSFX.com, and as always, happy trading.